We are digesting the country's latest finances and fiscal budget, the first since Prime Minister Carney took office. We're joined now by Sahir Khan, Vice President at the Institute of Fiscal Studies and Democracy at the University of Ottawa and former Assistant Parliamentary Budget Officer. And Sahir, thanks very much for joining us.
My pleasure.
Initial reaction to this budget, is it what you expected?
I think it's largely what we expected. We had a deficit forecast between kind of a range of $75 to $90 billion, and a lot of it kind of depended on how much of the platform measures would make it into the budget. So I think we got a sense that they kind of started with that kind of low end of the range and then built a budget around it. I think I wouldn't use the word generational. I think it was used a lot in the document, but it is a pivot, and I think it's a substantial pivot from the previous government, as your previous guest said. After 10 years of wealth transfer and social programs, I think this government now privileging economic growth, and we see that. I think the sleeper issue in all this is really the capital budgeting approach. Basically, the government has as a fiscal anchor, it's got deficit to GDP. We can still keep an eye on debt to GDP, but having an operating budget balance means that really we can't spend on large new programs anymore unless there's corresponding economic growth. If provinces are going to come to the federal government asking for help on healthcare, they're going to need to ask for capital, hospitals, long-term care facilities. I think the age of kind of large social programs is probably over. Our sense is we're sustainable over the long term, but with kind of a bumpy path over the next decade, which means really some vulnerability to any really large shocks and not a lot of room for any big ambitious programming at the federal level. So this could redefine governing at the federal level for a decade, and I think that from that perspective, it's generational. And if it closes the business investment gap as well, we're going to see that over the medium term, over the long term. And I think that's really been heavily targeted in this budget.
Okay, let's talk first about the budget, or the deficit itself. You thought it could be up to $90 billion. What were some of the things that you thought might be in there that didn't make it in?
Well, I think we might have expected some more aggressive measures on taxes, and they went really hard on manufacturing, and that's a vulnerable sector right now. Maybe we thought something might be more broad-based, just in response to the Trump administration. But I think with every tax cut, you're going to see the deficit go up even further, and so I think this was a balancing act. I think the government decided it was going to operate within a framework that they thought was going to be palatable to Canadians. So we saw a spending review that got about $50 billion. Maybe we thought that could have gone deeper, but they excluded transfers to people and transfers to provinces. So healthcare was kind of off the table. So once you make those kind of fundamental decisions about your priorities, then within those chalk lines, you're trying to construct a budget that kind of pivots the country and the federal government, towards capital investment and growth.
And now with this shift to capital budgeting, the big projects, can they happen so that they've been so touting in this?
Yeah, I think, I'm comfortable giving them a good grade on this budget, but it's like a midterm grade. I think the final term grade, I'm at a university, I've got to use grades, but but I think the final term grade is on execution, right? And this has been kind of the Achilles heel of the previous government, is on the delivery side. So you've got a public administration that's really got to step up, a leadership cadre that's got to step up to deliver. And the other part of this is it really depends on the private sector moving money from the sidelines. Maybe getting the Maple 8 to start investing a little larger portion of their portfolio in Canada. But we got to get that investment coming in as well, so that the government gets leverage on these dollars. And I think that's the difference between the government just putting out a subsidy or an infrastructure program and saying, hey, we're going to leverage it, we're going to crowd in private sector investment. And I think that creates a complexity on execution. It's necessary, but it's just not easy. And I think that's where the efforts really got to be, over the medium term.
And what will be some of the signs that might say to you, we're not going to do it?
Well, I think if we start to see projects drag, if we see a list of priority projects emerge and we don't see progress on them. So I really hope there's a dashboard. I also think that if we see the stakeholders at the table early, federal government, provincial government, Indigenous people at the table early, that'll be a sign that they're going to kind of get the decision-making coordinated. If everything has to work sequentially and you're duplicating, I think then we're going to have problems. We see this in the U.S. where you'll see federal federal and state, local officials at the table with decision-making powers moving very quickly. And you see a Trump government with very aggressive industrial policy and the ability to move quickly. That we have to replicate that in Canada if we're going to be competitive on these issues. And, the Trump administration has weaponized trade, but they've also gone on very aggressive industrial policy. It's not just the amount of money they spend, it's the speed at which they're able to execute. So this is kind of what we're up against. If we don't match that tempo, then I think we're going to lose out on attracting investment and keeping it, because the Americans can simply move faster than us, even if we have a better proposition for them.
Okay, Sahir, thank you very much for joining us. We appreciate it.
My pleasure as always.
Sahir Khan is Vice President at the Institute of Fiscal Studies and Democracy at the University of Ottawa and former Assistant Parliamentary Budget Officer.